Brian Tan, senior regional economist at Barclays, joins us this morning for more. Brian, let's talk those Q2 GDP figures. What stood out for you?
I think it came in, despite the fact that the headline was probably a little bit better than what most people were expecting. I would say the details have been in line with what we have been arguing for since the start of the year. Manufacturing remains the weak point, as mentioned. Exports are under a lot of pressure, but services is still holding up quite well, and that's pretty much in line with many economies around the world. Of course, we are seeing still a recovery in tourism, and that's providing a very, very powerful boost to the economy, despite the fact that the manufacturing sector is in a little bit of trouble right now.
Well, Brian, with the quote-unquote expansion, are the risks of a technical recession out of the picture then?
My sense is that it probably is, at least for the rest of this year. The reality is that the second quarter was probably always going to be the weakest point for manufacturing. We are already seeing some signs of stabilization in exports around the region. The Korean export data for June, for example, it started to show signs of stabilization. So that's a little bit of positive. It might take some time for the numbers to really show up in terms of strength for the rest of the region. But at the very least, my guess would be that we are seeing already the bottom of the weakness that we've been getting recently. And hopefully for the rest of this year, there's a little bit of a gradual pickup. Now, whether how strong that would be, we would be quite cautious. We do think that the recovery, if there is one, is going to be relatively gradual. Describe it more like a stabilization rather than a significant jump from where we have been.
I think for trade reliance Singapore, external trade slowing globally is quite a headache. What are the biggest headwinds then for external trade?
Well, first of all, in the US, it's been quite resilient. I think more resilient than many economists and the market has expected. But it is slowly, but it is showing signs of moderation. And ultimately, with the US Federal Reserve still being quite cautious, yes, the data has been a little bit on the side of them stopping earlier. But if they are still going to persist with hikes and more importantly, keeping interest rates relatively high, then that is going to weigh on the US economy. On the Chinese side, we had a lot of optimism at the start of this year that the reopening would provide a very good boost for the rest of the region. But what we've seen is that the recovery has been mainly in the services segment, which tends not to consume a lot of imports from the rest of the world. And as a result, we've not seen that much of a pickup in terms of shipments to China. And at the same time, momentum is already fading on the China reopening.
Brian, let's talk price pressures as well. Your expectations for inflation in the second half of this year, and how would this complicate matters for the central bank? MAS expected to, stand pat on its tightening policy?
We have seen core inflation starting to moderate. It's coming down, and we do continue to think that it will moderate into the end of this year. That said, though, it is probably going to stay a little bit high, probably in the middle of the 2 to 3% range. The MAS, I would suspect, would much rather see that going down below 2%. So we are in a difficult situation where, yes, the economy is slowing. The labor market tightness is cooling off, but the labor market itself is still relatively tight. The unemployment rates are still very low. Many businesses still find it very difficult to find workers. And as a result, with that kind of inflation profile, it's cooling off, but still elevated. We have another GST hike coming on the 1st of January. We do think that the MAS is going to remain quite cautious. They will stay on hold. They're not likely to ease monetary policy at the moment. But at the same time, with inflation coming down, there's no strong need for them to tighten either, especially with the global growth outlook still under quite a bit of pressure.
Brian, thanks for joining us to break down those figures. Brian Tan, the senior regional economist at Barclays.